Hey there guys, Financial Forecaster here, and today we're going to look through the portfolio and I'm going to go over the buy prices for my positions, new positions I've been starting up, and positions that I am excited to add on any dips that are coming on the future. So if you're excited to see what's in my portfolio, where my buy points are, and even where my sell points are, this is the video for you. So we're going to go over it right now. So let's dive right in. So let's go to our handy dandy Wealthsimple app. Now, if you don't know what Wealthsimple is, it's an online trading brokerage here in Canada. $0 commission. So the way that we have been investing since the pandemic started is we've been putting money in drip by drip, share by share. Any dip we average in, we average out. This has been very important as a change to how I have been usually investing. About 2 years ago, when I was starting my heavy investing into the market, I was using RBC and it was costing me $10 a trade. Now it doesn't sound a lot and you have to trade in big chunks, but because of this, you have to really commit to a buy point. And I wasn't feeling that. I wasn't able to time the market the way I liked. I didn't really appreciate getting in at those high prices and not being able to average down because of the cost to me. So it's Wealthsimple, $0 trade commissions. You can buy one a share, you can buy 100 shares, $0 commission. There are some drawbacks, but the way I invest, it is absolutely perfect for me. So let's move down the list. I'll quickly go over each company and I'll tell you my buy points. So we'll jump onto the Wealthsimple Trade app and we'll start right away with one of my favorite dividend yielders, one of my favorite responsible companies, one that has been growing in Canada for a long time. We have Algonquin Utilities, and it is a fantastic stock. They have exposure to America, they have exposure to South America, and obviously they have exposure in Canada. This company has been growing their dividends steadily over the time. Their share price has been growing over the time. I expect great things out of this company, and I highly recommend it. Obviously, I'm not a financial advisor, but for my portfolio, I am advising it to myself that I like it. I'm buying anywhere under $20. I will be averaging in. My average is sitting at about $19 right now, but I very much enjoy this stock. Next is Aecon, a construction company here in Canada. I've been averaging in since about $13. Great dividend growth. All the analysts are saying strong buy. I'm a little tepid on that because of the slowed growth, and it could definitely have to do with infrastructure spending in Canada, but I'm going to keep my eye on it, and if it drops below $15, you can bet I will be adding some shares. Next, Aritzia, and I could have saw this one going up from a mile away. I was buying heavily at the $17 to $18 range. Their move and pivot to online e-commerce was incredible. Now, unfortunately, it's at 24.80. It's getting a little high price to sales ratio for me. I probably wouldn't start buying anymore till it dropped under 22 or 21. And as of right now, my position is about $3,000. I will probably let it ride until there. Brookfield Infrastructure, Brookfield, massive conglomerate in Canada. I absolutely adore it. I probably won't buy anymore unless it drops under 64, but you can bet with that healthy yield, that massive company and balance sheet, I will 100% be buying some more Brookfield Infrastructure. And I'm heavily on the infrastructure and the utility side of Brookfield. You can go asset manager, you can go property partners, you can go renewables, and if I went any other way, it would probably be renewables. But as I see it right now, I think that coming out of this whole medical situation that we're in, infrastructure spending in the new administrations, either in Canada or America, will be where it's at. Chemtrade, got stuck in it, dividend cut, but I saw the value of the company. I see it, a nice steady income from it. I'm able to drip it every day. I'm not selling it. And if it drops below 480 again, I'll be buying a few more shares. Not a healthy dividend yield, but a very large dividend yield of over 10%. Canadian Utilities, we've talked about it in previous videos. Longest growth streak of dividends in Canada. Boring, steady, dividend-rich company. Doc, you gotta have your telehealth, $2.29. I rode it all the way from 80 cents up to $3. As soon as it started dropping below $2.50, I've been adding to my position. When it went to $2, I added to my position. But because of the price to sales, I believe is still around 18, 19. It's a little rich for my blood. I will not be adding unless it drops under $2. Enbridge. Now, I want to talk specifically about Enbridge, and I'm even going to have it as the thumbnail. I've started a position today. I thought I never would. This is a gas and pipeline stock. I would love to very ethically and morally invest in the stock market where I can. But I had no idea, and I don't know if you did either, that Enbridge has been boosting their solar and wind farms since 2002. And with the healthy dividend, just increased their dividend. I'm in. I love it. I was looking at it at $39. I see it at $42. It's barely recovered. If we can go to the 5-year chart, it is way off its all-time highs. Great dividend, raising its dividend. And I think if it can continue with the renewable push, which I will be looking into, I'm in. I'm along for the ride, and I will be buying anywhere under $42 a share here or there. So let's get back to the portfolio. Next, I've started an interest in food. I've been loving it. 40% of Canada's whole food box market, food has gotten. I am along for this ride. I've got 32 shares. I will be adding only under $8 until I see the next quarter. I have no idea what their growth is right now. Their growth last quarter looked exceptional. I don't know what their balance sheet is looking like anytime recent though, and I would like to know more before I put any, but I will definitely be investing anything under $8. Fortis, tried, true, 46 years of dividend growth. Can't go wrong with Fortis. Anything under $52, I will be adding a share here or there for decades, literally decades of dividend growth. Granite, I brought it up in my last video. Great dividend payout. It's a REIT, it's industrials, it's a bunch of these multinational companies that you've never heard of, except Magna. They started off with Magna, car parts, things that aren't going anywhere. They're increasing their footprint all over the world. They're increasing their dividend, and they have plenty of room to do so. I will be buying Granite anywhere under $75. Unfortunately, they've ran up a little bit today, so I will not be buying any today. HEO, huge position I'm getting into HEO. I've got $265 going, $265, 118 shares, and I am loving what this company looks like. The reason I'm loving like this the company looks like is another reason it's going to be in my thumbnail too. Water treatment. Water's futures were just added to the market. Water is going to be more important. These guys focus on desalinating water and treating it. I could see in 5-10 years that they're going to pay out a nice healthy dividend. I'm going to grab in right now without a second notice. Anywhere under $2, excellent bet. Grab it if you don't already have it. I'm going to keep buying it. We got H&R. I'm probably going to sell my position in H&R. I've had it since $10, but I have a very small position, as you can see. All right, right here. Not a big fan of it. Office space, real estate. It's okay. I'd rather put my money into industrial real estate. Kirkland Gold. I bought it before the run up. Still hold it after the run up. You got to have precious metals in your portfolio. I have about 5% of my entire portfolio in this. This accounts for my RBC and my Wealthsimple account and my RRSP. And I will be holding Kirkland. I think they have tons of room to grow on their dividend, and I believe they will do it by quite a healthy margin next time they raise it. Lightspeed. Wow, what a growth stock. I might even think about cutting Lightspeed. It has been on a run. As everyone can see, I was buying at $33. And there you go, my average price, $33. It's run up to 14% of my portfolio. As I said earlier, I like to rebalance every once in a while. Lightspeed might be one I might cut a few shares from. But you know, I don't know. It's running. I got burnt when I sold Square. I might not sell this one, but I'm looking at it. I wouldn't be buying it anywhere close to $76. Maybe if it dropped to the 50s again, I might buy a share here or there, but it's not looking like it. And I'm gonna stop there. I'm gonna do the rest of my portfolio update tomorrow on a separate video. Gotta space them out, and this one's already getting long enough. I would like to say that I'm not a financial investor. Well, I am a financial investor. I'm not a financial advisor, but I'm a Canadian, and I love these Canadian companies, and I would like to keep investing in these Canadian companies responsibly, safely, and you know, forecasting the finances of my future, which is what we do on this channel. Thank you for everybody for watching. Hit that thumbs up and that subscribe if you like to see the rest of the portfolio and me talk about the rest of my positions. But that's it for now. Thanks for joining.